your bubbly and beautiful host, Elizabeth. It's the Caffeinated Cooper Show.
Yeah, I believe in you. I don't believe in lucky sevens. I'm not sure about Loch Ness, but I know I believe in angels. I believe in happiness.
Happy day to you. So we have the news, and without any further ado, J.C. Schweingrouber of Vista Front Partners. How are you? I love to have you on the weekends because you feed us financial education. Thank you so much for that.
I'm doing my best. I'm glad to help anytime. Happy weekend, everybody. Happy Saturday. I hope everybody has some fun plans for the weekend.
Yes. You know what? In the Southeast here, I mean, the weather is a little chilly, but it's sunny. It's always so weird because I sign up for the Weather Channel alerts, right? And those alerts will pop up and say like high fire warning, high winds. And I'm like, really? Because 2 days ago, the soccer fields were closed because they were flooded. So which is it?
Yeah, spring is, old man winter's rearing its head here today. It's here in Virginia, like in springtime, you catch all four seasons here in the mountains. And today, a couple days ago, it was in the 60s. Today, we're in the 30s. And with the wind chill later, it's supposed to feel like it's in the upper 20s. Chance of snow. And then this week, we're going to be back in the 70s again coming up. So go figure.
Are you serious? You really have a chance of snow?
Yeah. We're under a high wind advisory, which I can hear against the house right now. But there's a chance of snow a little later on today. Now, I don't think we'll get it, but there's a chance. I don't want it. I'm done with it. I'm ready to move on to spring and summer.
Me too. I was looking at those Facebook memories, and I guess, we did, it was like 2 years ago or something. We had snow on the 25th of March, which that's just way too late. Like I'm done. I'm ready to get out. I'm super excited. I went to the pharmacy yesterday at my local Publix, and they've taken down those COVID barriers. And I'm like, what? I can touch the pharmacist if I want to. We no longer have this wall, and like all the walls are down. So I think everybody's just like itching to get out there.
Yeah. Oh yeah. So one of the things that I liked was I had a memory that popped up from a few years ago, and it was a beautiful sunny day. It was late in the day, and I was on Lake Hartwell in Georgia.
Yeah.
Which is huge lake, beautiful lake. Unfortunately, I didn't get a fish there, but I was traveling through and doing some research on a book at the time. And man, what a gorgeous lake and a sunset. And I took some really nice photos.
It is beautiful. They have a lot of campgrounds around Lake Hartwell, and I haven't gone there yet. We got into the RVing, we did all the 2020 stuff. We adopted a dog. We got an RV. And we've been enjoying the RV camping, which, that's my speed. Camping where I still have a queen size mattress. I'm good. And we haven't tried out the Lake Hartwell area, but I have a lot of friends who own boats on that lake, and they really enjoy it. It's a beautiful spot. And it's kind of like that South Carolina, Georgia. I think half of it's in South Carolina. The other half is in Georgia.
It's a monster of a lake. I mean, it's huge.
It is.
And I driving past the lake, and when I was down there, I got to drive through so many small towns. We're probably a couple hours from an interstate anyway, out in that part of Georgia. And there's so many little small towns in Georgia and South Carolina that I got to go to before I ended up coming out near Clemson and heading to Myrtle Beach. But it was just an amazing trip. It was fun.
So spring break is coming up. Before we get into the hardcore financial talk and stuff, are you doing anything this spring? Going anywhere? Can anybody catch you anywhere and be like, hey, I know you?
Well, those who know me from the books that I write, I'm doing a couple of book signings coming up. That'll be in Virginia, but it's going to be at a scenic overlook. It's there's this really artsy center called Big Walker Mountain Overlook. It's along a scenic route that people will get off the interstates and drive. And it's such a beautiful, beautiful place. But at the very top of the mountain, this there's this big fire tower that used to be there, decades ago for lookout. But people can still climb to the top of it this day. They would walk across a bridge, across the parking lot, and live music every weekend, Saturdays and Sundays. And I will, so they host a band and, local music and a local artist. So I'm sort of local there. It's about an hour and a half, about an hour and 20 minutes away. But I'm going to be going up there twice and doing book signings, once late May or mid-May, and one in early June on a Saturday.
Very cool. So tell me, I haven't written a book yet. So of course I've never been an author at a book signing. I wouldn't know the answer to this question I have in my brain, but can they bring some of your older books and will you sign all of them, or are you just signing the book that they purchase on that day?
Oh no, I'm not stuck up. I'll sign whatever they bring. So I've actually had people do that, bring books that they bought on Amazon, ask me to sign while they're there. So that's kind of cool. It's kind of flattering, but I always have books there at the table for sale, and they can pick and choose whatever they want to buy. For those who don't know, I write under a pen name Cyrus Alderwood. Some of your guests, some of your viewers know that because they've seen me on some other shows. But because with my last name, I had to use a pen name because no one can spell it. So, but no, I really enjoy writing novels on the side, and it's fun. But I like getting out and meeting people that are well read and talk about other books they like, and they recommend things and I'll recommend things. So it's kind of fun.
Yeah, no, absolutely. And your books are so engaging and they're so diverse. And I mean, really, quite honestly, you're so diverse because you read some of the books and you're like, oh, okay. I think I kind of have the author figured out. And then you read another book and it's like, oh, wow, this guy's brain's pretty cool. And now you're on here educating us about financial investing. And we're going to talk about the market and, what happened this past week in the market?
Well, thankfully, we've had for the second week in a row, we've sort of seen the market come back and rebound from several weeks when it's been down, because it's been a brutal couple of months in the market. And I think everybody who has a 401k, they know it, they feel it, they feel the pinch of inflation. And of course, we keep seeing those numbers coming out. This week, so last week, I'd mentioned that the Federal Reserve had finally started their interest rate tightening. So they raised a quarter point. They'll meet again next month, and I guess the odds are they're going to look at maybe doing it 50 basis points this time. So that's something that I think the market has already priced in. So they've already assumed we're going to have several rate hikes the course of the year, and they've already kind of sold off and priced in, unless something drastic happens, okay, and they do a drastic move. But this week we have some really interesting numbers. Housing starts in February had dropped, and it's I think the pending home sales, and I'm trying to remember this from an article I read on CNBC, which is like that's a measure of the signed contracts on existing homes. Mm-hmm. That fell just 4%, 4.1, like that in February, as compared to January, and that was according to the NAR, or National Association of Realtors. Now, sales were down, I guess, compared to February of 2021 by a little over 5%. And with interest rates kind of ticking up, the mortgage rate went closer to about 5%. And it was kind of a big jump this week. So the average on the 30-year fixed right now is 4.95. So that jumped up, was it 24 or 25 basis points? And that was quicker than people were expecting. Mm-hmm. So what that really represents, and when people are saying, well, what does that mean to me if I'm buying a house? Well, with both rates and prices now very much higher, the average mortgage payment now, if you would be 20% higher than it was a year ago. That's big. So that's going to slow the housing market. So I think that's kind of what people are looking at. So that was one of the big pieces of news that I took away for the week. Another was last week's show. I mentioned the 2-year Treasury versus the 10-year Treasury, mm-hmm. and what those rates are and how close those rates have come together. Right, the 10-year was slightly higher than the 2-year yield, mm-hmm. But it was, I think, by about 24, 25 basis points. So it wasn't far. It's just a quarter of 1%. So in other words, if I'm buying a Treasury at 2 years, it's maturing in 2 years, I'm going to get a certain amount. But if I buy a 10-year, I'm only getting 0.25% more for that amount of time. So people are probably going to rush into the 2-year, and that brings the 10-year yield down. So what you don't want to see is those yields invert. Short-term rates higher than long-term rates, because that signifies a recession. Now, what we did see this week, one of the reasons I look at the 2-year and the 10-year is because for like the last 70 years, since the 50s, early 50s, every single time the 2-year rate was higher on the Treasury than the 10-year rate, there has been a recession. Now, some have been very weak and minor. We've got through them easy. Some have been pretty significant. But one of the things I wanted to point out was on Thursday of this week. So I'm watching the Treasury yields, and I look at the yield on the 5-year Treasury, on the Treasury note, and that was 2.4%. And I jotted this down. Actually, I jotted this down because wow, okay, because the yield on the 7-year Treasury was 2.43. So I mean, it's almost the same. But here's the scary part: the 10-year bond yield was 2.38. So both the 5-year and the 7-year are now higher than the 10-year. That's an inversion. So every day this week, when you've watched CNBC or Bloomberg or Fox Business or whatever, you've heard the R word mentioned every day, a possibility of a recession. Because you have rising rates, terrible inflation. The supply chain's kind of getting a little better, but not with all that's going on with Ukraine. That represents a huge portion of the world's corn supply, wheat supply, things that are needed to make food products. So, and then when I say significant, I mean over 25% of the world's supply. And so people kind of don't really think about that. Wouldn't it be a shame if Vladimir Putin did to those farm fields what Saddam Hussein did to the oil fields in Kuwait?
We forgot about that.
Yeah.
I want to say a good bit of us have forgotten about that.
Yeah. He just burned and pillaged on the way out.
He sure did.
And it took months and months of not just their professionals, but our professionals here in the West and the oil industry to go out there and corral them. And not only did it cause a terrible environmental disaster, but it was an incredible waste of supplies that kept energy prices high. And they're high enough right now. They're not getting any cheaper. So, yes, I kind of point that out. But on Thursday, the 2-year, 10-year, that was only 13 basis points apart on Tuesday. Now that Wednesday, last Wednesday, when the rates increased, then that went back up to 21 point spread. So thankfully, that hasn't touched. But it doesn't mean the recession wouldn't happen. I would actually caution people to maybe expect one, because anytime you see the pundits on TV talking it up, it's almost like a self-fulfilling prophecy. People are going to get nervous because they hear the R word. They're going to pull back their spending, start saving, and that's just a self-fulfilling prophecy. So when it comes to your investing, like I mentioned, this is not really the time to jump into high-flying companies that have negative earnings. I mean, some things may be sexy, cutting-edge companies that you want to get into, but it's maybe not the best time to buy into those companies that need to borrow more money and have more debt to continue their operations. But now that debt just got more expensive. So I'd caution people, if you have a long-term strategy and you're comfortable with the price, do your homework. But definitely look at those companies that make goods and services that people need. They have good cash flow. They have good earnings. And, hopefully, pay a dividend back to the shareholders.
In the education that you have provided for us, and we were talking a few episodes back about investing in an entire sector, it seems like to me, and I'm not very educated, you're the master here, I am only but the student, and
more like a karate gi. Yes.
It seems like the energy sector, technology and energy is going to be where it's at, because goods. Let's just talk about going to the grocery store. So I went to the grocery store twice this week, once on Monday, once on Friday. On Monday, I thought, okay, chicken is low, but we know that Tyson is like shut down because of the avian bird flu. So they have to cleanse all throughout the chicken stock that they have before we have more chicken. This is going to take a while. So, all right, that's understandable. Some things were still spotty, maybe it was not as much toilet paper, not as much this, not as much. Then I go to the grocery store yesterday. Milk is almost completely out. And this is of a super mega grocery store, a huge floor print. It's a grocery store that is throughout the entire United States under multiple different chain names. So of course, they have some really strong contracts to keep the foods coming in, and they're seeing empty shelves. So in my mind, I'm thinking, I need to take notes here as to what I want to invest in and what sectors I want to stay out of. And it seems like the goods and products type sectors isn't going to be where it's at, but the energy, technology, and pharma may be where it's going to be to get us through the recession on the investing side. Is that true? What do you think?
Well, yeah, there's still a lot of people who are very bullish on part of the technology sector. But again, you want to look at those that are making money. You want to look at like your Googles, your Alphabet. Facebook has a good, I guess a cash flow, even though they're doing Meta now, right? Apple. I mean, again, now keep in mind, I'm not giving anybody specific advice to go buy these stocks. Depends on your portfolio and what your needs and long-term objectives are. Do your homework before to make sure you're comfortable with the risk. We're going to see ups and downs. I think we're going to see market volatility continue through the next several months until this Ukraine situation gets worked out. But like you said, it goes back to the fundamentals of a company. These companies are the ones that generally lead you out of a recession. As a matter of fact, I'll mention one thing. It's usually when you see a recession come, the first companies that actually are the ones that like kind of come out of there like a rocket ship are those small cap and mid cap companies, because as the recession is over, generally what happens is the Fed had maybe been lowering rates or borrowing gets cheaper, and then they can borrow money and then expand their businesses and their operations. And small cap companies that make money and have cash flow, that's good. Those are some of the companies that you want to look at coming out of a recession. Now, keep in mind, you have to have some stomach for this stuff, because if you looked over because the stock market is always forward looking. So it may be going up during a recession, and people are like, why is that happening? Well, the people who saw the recession coming already sold out before and then turned around and bought low. So that whole time, several weeks, during the fall and through the first part of this year, that you've seen the S&P and the Dow go down, and you've seen those dips. That's why I talk about why it's important to buy on those dips instead of getting nervous and sell, because you haven't lost anything till you sell. But if you like the company at $50, for example, you love that company and you bought 100 shares, and now that company is trading at $40. Well, look at it like it's your favorite pair of shoes on sale, or a purse, or something went on sale that you really want, and you buy more of it. Well, the chances are when the recession is over, when that downturn is over, and those stocks rebound, well, it's nice to have your shares average at $45 instead of $50, because you're back in the green a lot faster. You've made money a lot faster coming up than you did. Down. So that's why it's important to take advantage of the market and not let it take advantage of you, as I always say. On those dips, you buy low with the good companies. But yeah, when you look at those, energy companies will be one of the things that you want to be wary of. I know when the Fed's raising rates, banks tend to do fairly well, but with high inflation like they do, and right now, financials may not be the place to be.
Right.
For a little while. Now, again, if you're a long-term investor and a certain regional bank that you like that's nearby has sold off, or like a big bank that's out there that you like, a multinational bank or something, and and it's sold off, it's like, wow, that's a good price. I'm going to buy it, and I'm not going to look at it for the next 5 years. Well, okay, I get that. If you're a long-term investor and you're not looking to make a quick buck, you're going to get nervous with all the volatility, because it may keep going down. But at some point, if you're comfortable with that company, and long term you're going to hold it, then I can see buying in those times like that. But like I mentioned before on the show, and this is another article I read. I was like, this is so true. You know how when I mentioned before, like how you have an analyst talking about other analysts talking about it too. One loves it, one hates it.
Right.
I kind of hate to like throw analysts under the bus, but when you look at do your research on a stock and you start seeing people say, all right, now it's time to sell. They put a hard sell on a stock. Well, crap, you probably should have sold it 6 months ago. Okay, for start. By the time they get around to admitting to it, and by the time they get around to putting a buy on something, it's probably already up 15-20%. And you see that all the time. So that's why it's important just the dollar cost average down and on a stock that you like, and kind of tune that noise out. Does that make sense?
That makes total sense. I have Michael Schwartz. He's connected. He's saying, what are your thoughts on the housing costs? So I definitely want to address that and elaborate a little bit. The housing market is still really crazy here. So I'm in the Atlanta area. I'm not sure what you're seeing in Virginia, but I was beginning to see, beginning to think that possibly that bubble is beginning to burst, because we had a few houses that went onto the market in this particular neighborhood, and they listed for prices below value. But here's the catcher. So let's say you have a house that is valued just under $1 million. They're putting it on the market for $775,000, $825,000, and we're still getting into a bidding war of $300,000 above asking is where it falls. And it's such a interesting dichotomy to be in, because this is not how real estate has ever worked, ever, ever, ever. If anything, you try to list it $5,000, $10,000 more than possibly what you might get an appraisal for, and hope that you're going to get to the price that you want to be. Not like this bizarre, super inflated other way around. Do you think with the increase in interest rates, are we going to see that bubble bursting sometime soon in the housing market?
Well, there's always a little bit of a lag in that, the bubble bursting, but I think you're right. I think that's probably likelihood, because real estate is different from region to region, and what you see down in Atlanta, crazy enough, here in my rural part of Virginia, I'm seeing that here.
Really?
I live in a small town that's not a destination for a lot of people to move to, and if you want to move out, it takes a while to sell a house. So unfortunately, I had a neighbor that passed a few months ago, and her family still has her house for sale over here. And when I looked at mine, I'm like, wow, okay, that's probably about 20,000. Now that's a lot different in a small town. Now in a city or suburb, you can get away with that dollar amount. Here in this town, it's probably 20, 30,000 more than what it probably should be. My sister is in a similar situation. She could sell her house for a mint right now from where she lives, and this is over probably about an hour away, but it's near an interstate and right next to a lake. And she could sell that house for a mint right now, especially after they had put an in-ground pool in,
Sure,
about 3 or 4 years ago. However, there's nowhere she could move that she would be paying more buying half the house for more than what she sold.
Right.
And it's frustrating. And Michael Schwartz, I see you say Oregon is going crazy. At some point, I'm glad prices of lumber came back down, because that was pushing costs up a good bit too for a while. But because I was talking to a developer there in Frankfort, Kentucky, near my office, and the same thing has happened around Frankfort. People from outside Louisville, Lexington, where they have higher incomes, are moving in, like surrounding the city. Some of the areas in the suburbs where people from Frankfort might move out to, they can't afford now because it's not in their income bracket, because there's just higher incomes in those cities. And Frankfort, for a state capital, is a small, quaint little town, and not I guess like a city, you'd have a lot of money there. But so the same thing is happening there. People are getting scared out of the market. People who want to sell would love to sell, but they've got nowhere to go, and that can't last long.
I can imagine, but I agree with you. So my sister's in Pennsylvania, and her area has always been, Dutch farming type area, country, very, very country. It's called Milanville, Pennsylvania. And she's saying we've had such an influx of people moving out of the city, because she's about an hour and 20 minutes northwest of New York City. And she said, so we've had so many people moving out of Manhattan and Long Island and coming out here that, of course, it's increased the housing values because of people moving in and buying up all these old country homes and this, that, and the other. And it's becoming more affluent. It's so interesting to see that when I saw this coming into the housing market, of everybody gobbling up anything that they could, because they were basically just, running from the areas that they were currently in that had become either too political or too expensive, that I thought this is going to be short-lived. And here we are, full 18 months into this, and it seems like it's still going strong. My goodness, what do you say to the buyers that are purchasing these properties that 2 years ago, that property, let's say, was $550,000, and they're coming in today buying it for $875,000 or $1 million, because that's what's happening. Like, that's so far upside down. They're just going to be hurting in 5-10 years, don't you think?
Oh yeah, absolutely. Absolutely. That's really putting people in a tough situation. Like, you remember back when the housing market starts, I could start seeing this coming in like 2006. And by 2008, 2009, when the financial crisis hit, and of course Countrywide had to get swallowed up by another bank, and all these things happened. I mean, even banks were going under that were doing these loans. And a friend of mine actually went out in Cincinnati and bought a couple of properties, and he was going to flip his nice condo he had overlooking the city. He thought he would be able to buy it, and a year later sell it for like 40 grand more, 40, 50, because prices were going way up fast. He took a $20,000 loss on that and was stuck with a house he couldn't get rid of. And I think it took him several years to get rid of it, because a business partner that was with him on that and backed out. So he took his job from Procter & Gamble and transferred to a place in Utah with his wife, and was having to fly back out to do maintenance on a house because it was too expensive at one point to pay people to come out. And, so he would come in every so often just to do things, around that house. It was people put themselves in a bind in situations like that. And this will probably be another one.
Mm-hmm. So, okay, let's flip back over to the market. You had mentioned, we were talking in the green room for a minute, and I wrote down in my notes here, and I'd love to allow you to elaborate and expand on it. So when the market's going down, you had mentioned that you had a client ask you a question. How does the money work for you when the market is down?
Yeah, and it was a pretty simple answer, because this particular client actually has even though they're in equities, they have more of a conservative equity strategy, because they were looking for income. And you can't find income in savings accounts right now because there's really not much. CDs at banks aren't paying anything. And money markets are still very low until the Fed, the rates get to a certain point where they're more acceptable. Dividends, it really is the answer. So even in a declining stock market, if you're averaging those costs down, like if you're buying in, those dividends that will pay you if you reinvest them back in. It's like the beauty of compounded interest, but it's compounding what you buy in a stock. So even if you didn't dollar cost average down, you had 100 shares, over the course of a year, if that reinvested dividend bought you an additional 5-6 shares, well, that's more than you had before. And when the market turns, it's more shares that are going up anyway. If you don't need the money, if you don't want to reinvest it and you need the money, having that money come in and pay you so that you can pay your light bill, or whatever you're doing, putting that in a rainy day fund or whatever, put it in your emergency fund, having the market, having something that you can own that will actually pay you during bad times, I think is absolutely essential. My first inclination would be to reinvest those dividends. I have some clients that really like doing that because they don't need the money. Some like seeing the cash come in, even though they don't need the money. Some really need the money to pay bills. So quarterly, they'll take a check from their account and put in their bank, and then pay whatever they want to pay, the bills, the insurances, and things like that. But always make sure, like I reiterated before, just make sure you have something that's going to pay you. Especially if you're going out and buying all these products at the store, A lot of those things you pick up off the shelf, they'll pay you a dividend. Now you can look for what's called, if you do a Google search on the S&P 500 aristocrats, okay, that is what that is a list of dividend paying stocks that are in the trade in the that are in part of the S&P 500 index that have consistently paid dividends for I think over 20 years and have consistently raised those dividends over time. So not only they pay it, but they have a tendency that their tendency is to raise what they pay their shareholders. So that's important. You can find those. Now, a lot of those dividends that you'll find right now pay between maybe like 1.5% and 3%, some a little bit more. But there are other stocks out there, keep in mind, that pay a much higher dividend yield. So if you buy a stock, like I mentioned before, at 50 and it pays 5% dividend yield, well, that, so what you're getting paid per year based on that price you buy. But if that price drops down to say $40 and it still pays the same dollar amount dividend, well, that dividend yield goes much higher. What is it, like 6% or whatever, or 6.5%? So depends on where you buy in, what the dividend yield you get. So if you buy in lower, you lock in that yield rate no matter where your stock goes. You bought at that price, so your yield is always sort of right there where you bought it. So that's important to do. I preach dividends and income and reinvesting those dividends over and over and over. I really ran into an interesting article this week, and I'm gonna pull this up real quick. If you bear with me just a second. If anybody wants to go over to the Vista Front Partners Facebook page, this is where you'll find it. I put it up there. That if you invested money 2 years ago in the market, where would you be now? All right, so that was the crux of the article. And it's not practical to expect this, but this came off of, I think, growacorns.com. It said, here's how much money you'd have now if you invested $1,000 at the start of the bull market in 2020, when everybody's been nervous with the pandemic and getting out. In the 2 years since hitting the bottom of the COVID bear market, the S&P 500 has returned 94%. You'd almost have doubled your money. Now, you don't know the next bear market's going to happen. I mean, we've seen the craziness here recently. So, I mean, I don't expect that every 2 years. It's not feasible. Mm-hmm. But, maybe once every 10 years, I could, the rule of 72, people apply that based on what the average market returns are. But that's how important it is to be in the market, even when everybody's nervous, because you can't predict how fast things are going to recover and how far they're going to grow out of that. Sure. So when people are nervous now because of all the inflation and the Fed raising rates, and sometimes you can't think of a reason to be bullish and invest, that's when you need to do it. So keep that in mind, folks. It's not a short-term game. It's a long-term game. I don't care where the market's at 6 months from now. I care where it's at 6 years from now.
And your audio went out for just a second. What were the last few words you said?
I was saying that, I don't really care where the market goes over the next 6 weeks or 6 months. I care what's at the next 6 years, 10 years. So, plan for those longer terms. Don't let the short-term noise and volatility and world scare you away from doing the smart thing long-term. And sometimes it takes a little stomach to do it, but, buy those stocks that or those mutual funds, or invest in a way that I'm going to be able to sleep at night because, things are crazy now, but my horizon is 5 years from now. So I'm not worried right now.
And I pulled that chart into the broadcast, which is on grow.com through Vista Front Partners Inc. on Facebook. So make sure that you go to Facebook to Vista Front Partners Inc. and so that you always get everything that JC and your partner are posting. And it has a quote here on grow.com. You have to be willing to accept volatility as a long-term investor. Boy, more than ever now, right? Absolutely.
Warren Buffett's famous statement, when everybody else is fearful, it's time to be greedy. And when everybody else is greedy, that's the time to be fearful. So just kind of keep that in the back of your mind. And Not worry about the volatility, but worry about, where you're going, and not necessarily where everything else and all the noise and the pundits are telling us we're all going,
Sure.
because we don't fall in a handbasket 10 times by now if we listen to them.
That's true. So I had a viewer send in a question before our broadcast, and I'm going to bring this question into light. And he was saying, how do I identify my investment goals? So starting out brand new, green, and, maybe they need to, they've decided not to continue to pay for life insurance, which I'm going to give a little backstory, because that's kind of where this person's coming from. Is, you eventually get to a point, either may it be health challenges that come into your life or age, to where life insurance is so extremely expensive. And it seems to me that investing is a wonderful way to go, but how do you identify those goals to know exactly how you should do what and when?
Okay, well, one thing is, the more that a person's willing to talk to me and explain their situation, the easier it is to kind of what roadmap we need. And sometimes I'll just tell you up front. Sometimes if you say, hey, I got 15 minutes, can we talk? Well, if we're going to find out what, people spend more than 15 minutes planning a vacation. And if you want to talk about your retirement and all your concerns, and sometimes it may be 2 or 3 conversations or more. But here's some of the things that I'll try to get out of a client, and not by asking yes or no questions, because those don't help much. I'll ask open-ended questions like, what are your most important financial concerns? Okay, so so people have a lot of issues in there, like the insurance issue you mentioned. That is a concern. Health is a concern. Maybe a new baby in the family and the expenses that you're going to have, and how that's going to impact your saving for your 401k or your 403b plans. Or is that going to cut into how much I can put in my IRA, or things like that. I mean, there's so many concerns that people have that it's almost limitless. So you can't really pick 3 or 4 big ones, because as soon as you do, there's like 10 more that pop up when you talk to people. So all kinds of concerns. Another thing I like to ask people is to kind of get an idea who they are and their way of thinking, is how do you make important financial decisions in your life and investment decisions? Tell me about your experiences, and what have you done before, and how did that work out? Kind of tell me the story. So I've learned, that people have all kinds of different ways of dealing with money and problems and issues. And some people are really meticulous and just track everything. I know people that will pull their hair out if they don't balance their checkbook to the penny, because that kind of control gives people a sense of security. And some people will just kind of ignore it and hide their head in the sand because it creates anxiety. So I kind of want to know what kind of person I'm working with. So how much of a hands-on approach do we need? And here's one thing that you're kind of like the typical guidance counselor question from high school. Where do you see yourself in 1 to 5 years? But I mean, it's cheesy. It's kind of hard to think, hey, I'm going to put out a 30-year roadmap. Well, let me tell you what's going to happen. That road's going to need all kinds of construction. It's going to change over the years, and anything can change at any time. So you have to be adaptable. But most people think that financial planning is all about retirement, which for most of my clients, it's 20, 30 years down the road. But there's a lot more to your financial life. And I think I mentioned this toward the end of one show a couple of weeks ago. Like, people just turn the news off, get away from the noise. Life is right here. Wealth is right here. You could be getting married. You could be buying a house. I mean, we were talking about with these rates now, having children, all the above. All these things play a huge role in somebody's financial well-being. And, good planners should not only help you create the life you want in the future, but address things that you need to know now to get there. So kind of getting that idea of where they want to go is very important. Here's another one that's just kind of basic, but a lot of people don't think to ask is, what kind of changes do you expect in your life in the future that your finances are going to be impacted by? I mean, if it's somebody that's in their 20s or 30s or even in their 40s, they've probably already seen a lot of change in a short period of time in their 401ks or their life in general. So, I should have to understand all those changes and how you handle those. So these are like very deep, long, detailed conversations, and it's a lot about just getting to know somebody. Are they generally optimistic or pessimistic? So it's not that you sort of have to play the role of psychologist in a way, or amateur one at that. But here's one that's off the grid that I'll ask. Tell me about their biggest non-financial concerns and objectives. Money is almost never a problem in and of itself. It's a tool to help you get what you really want out of life. You've read that in many a thing, right? So, people take place. The conversations we have are mostly about your feelings about risk and your dreams, your planning, meaning, and purpose. So, these are all things that are values to people, and I think it's very important for me and a client to get along to the point where we understand each other's values. And that a lot of times doesn't necessarily have to do with money, but you can get a sense of a person, and how do you really represent somebody with their money if you don't fully understand the person? That's why I think it's important. You just don't have those boring once a year. Let's review your portfolio. Are you comfortable? Blah, blah. You can do that. Have a relationship with people. Sometimes call them up, just people need to understand that you're going to be there for them. Even sometimes if you're just calling up to say happy birthday, you got to remember those things. I want to know if they've ever worked with another financial advisor, if they're working with someone now, because I don't want to deliver mixed messages. We need to make sure that, if you have a husband and a wife and they work with different people, are they on the same page? So if you're dealing with big, large portfolios, you kind of better know that. And I would ask a client, what ways do I need to be? What are the keys to making our relationship successful for you? What do you get out of the relationship with me? And other than just making money, I get that all the time. Make money, that's the first thing people say. But you kind of want to have those understandings too. And when you kind of get that full expectation from what a client needs, and it certainly makes the relationship a lot easier. It's certainly not that managing the portfolio is the easiest thing in the world to do, but you certainly get a feel of how much. All right, we're not going to take this risk versus somebody that might be willing to take a little bit more risk and something speculative stock, for example. I have a client who has a portfolio that likes to be fairly secure, dividend paying type things. But man, there's a little portion of that over there. He's like, man, let's swing for some fences. Let's have some fun. And he will call me up and give me hey, I've looked at this and this. What do you think of that? And I get to the point where I've looked at this and this, and I give him home. I send him home to do stuff. He enjoys that, and but I'm glad he's engaged. Glad he's paying attention to that. But there's only a certain amount you do the speculative kind of thing. But we'll have a full conversation about what kind of risk is in there, and hey, do you want that or not? I mean, are you gonna be upset if you lost 50% of it before we sold out, or this, that, and the other? Yeah. I think, but one of the things is the experience of the client. I would want to know what kind of experience they have and why they think they need help. I hate to charge somebody money if they don't need my help.
Yeah, no, absolutely. So that really, that one question just kicks off so much information, and it's building the relationship is what I'm hearing of. The one that I've heard is, how do you want to utilize this money? Are you expecting to be able to put it into the market and then pull right back out? Or is this something that can sit here for 5 years, 10 years?
Yeah, you got to know those time frames. And if it's something somebody needs in 6 months or a year, folks, put it in cash or a T-bill, because if you do anything else with it, you're just gambling. You might as well go to Vegas. You know what I mean?
Yeah.
Because in the short term, anything can happen and drive the market down that we don't see coming. Those black swan events, But yeah, so you definitely have to know those time frames. Did that answer your question?
That totally answered my question, and then so much more. I think it also spotlit what someone would be getting involved with to engage with you as a financial advisor, because a lot of these things that you listed off, maybe some other financial advisors wouldn't list them off, or they would have another set of things that you both want to be on the same page with. So I like that you shared that, because you brought up a lot of really interesting points. Like one of the ones that I had up here, and I'll bring it back up to the broadcast. What are your biggest non-financial challenges? So, you're starting to ask questions that's really getting into the full animal as a 360-degree, three-dimensional object of saying, okay, I need to know all these things. And, I'm really thankful that you answered that. So thank you.
Yeah, it's almost like, somebody that, hey, we have a heart surgeon, we need heart surgery, so we're going to go in and do a bypass. But they don't ask anybody about how's the health of your kid. I mean, how are you going to do with the surgery? How's the rest of your body going to react? If you don't find out those things, you put the client at risk, and I put myself at risk. It's my reputation. I don't want to. You take time building it. It only takes a couple of dumb things to ruin it.
Right, exactly. And I like that you do your homework. I like that you work so closely with your clients, and that you're educating us for free. Every weekend that you're available, you're on here educating us for free, which is like, oh my gosh, that's like lollipops and candy just falling from the sky. I love it.
Well, I'm glad to do it. I mean, there are numerous books that are out there people can go and buy and learn, like Investing 101 and things like that. But honestly, when I got into this business years and years ago, and I started off with Edward Jones and went on to Fidelity. And one of the things that I enjoyed most was like when I spent time with a client and they learned something that they carried forward, like somebody that didn't understand how to research sometimes like just how do I research a stock? I'm looking at this. What am I looking at? And I can walk them through that. And you see that light bulb go on, and you just know you help them immensely in making a good decision or avoiding making a really bad one. Especially those. It means a lot. So the education part of that of this business is always kind of one of the things that I've just loved about it. I just love talking to people and helping people. I mean, we're all in this boat together. Let's make sure we get to the finish line and do it okay.
We sure are. And when it comes to the market, when it comes to what people are consuming and buying and driving, prices and value in company from this company or that sector to this to that, we are all in it together. Because we all have a currency of some type, no matter where you live in this world, and we're all putting that currency into things. And that's what keeps it going, right? That's what drives the market, is what kind of currency you're going to put into it, correct?
Absolutely.
Yeah. All right. Well, thank you so much, JC. This has been another really educational show. I hope that maybe if you have some time next week or the following week, just let me know. Let's do another.
Will do. And thanks again, everybody, for tuning in. I really appreciate those who follow this on a weekly basis. Thanks, Michael Schwartz, for the questions. I certainly appreciate that too. Hopefully I answered those okay for you. And if anybody needs me, you can find us on Facebook or vistafrontpartners.com and go through our contact page. When I do talk to people, we can talk via phone. I do love talking on Zoom because it's nice to put a face to who you're talking to and all that. So.
It absolutely is. And your email is jc@vistafrontpartners.com. So everybody contact JC. And if you have a question that we didn't get to, if you're watching this in post-production to where we're no longer live, hey, just go ahead and send us the email jc@vistafrontpartners.com. And thank you so much for your time. And we'll see you again soon.
All right.
Thank
you.
Have a good weekend, JC.
You too, Elizabeth.
Thanks. Oh my goodness, everybody. I loved being able to get that education and understanding. And he always has the best websites to do your research on. So, even if you just want to pick his brain for a quick moment, he is happy to answer and to engage with you because he is truly committed in helping all of us and gaining an understanding so that he can educate those. He's also, we didn't get to it this broadcast, but we did last weekend. He's starting to create and produce videos. And I'm going to go over to his Facebook page just so that you can see for just a moment. And those little videos are very short content, easy to consume information that helps to educate the average person out here. Oh, it doesn't want to share. Okay. The average person out here in humanity that would like to be able to learn a little bit more about the financial world. So give us just 2 seconds. I'm going to refresh the show, and hopefully I'll be able to show you those videos. Alrighty, so we're back. We're going to try to go over to Facebook for just a quick moment. Thank you, Michael Schwartz, for tuning in. Here we go. It looks like it is working. Live is live, and technology is technology, is it not? All right, here we go. Michael, I love your comment, but I'm going to bring your comment down just for a moment. There we go. All right, so this is Vista Front Partners, Inc. Facebook page. And like I was mentioning before, he posts all kinds of great websites, wonderful research. He has videos such as this one right here, life events that could change your investment strategy. So much information, so much richness. Make sure you go over to Vista Front Partners, Inc. And of course, this is the news, and we do birthday shout outs. So if you'd like us to do a birthday shout out, just email us. I'm going to type in the email right now. It is ecooperstudios@gmail.com. That's ECOOPERstudios@gmail.com. And I'm going to leave that up there in the broadcast so that you can write it down. If you have a birthday shout out, if you have a sobriety birthday shout out, if you have someone in the military, someone around the world you would like to say hello to, some kind words, anything like that to share, an anniversary, please email us. I would love to be able to add it into this news segment. Last week, I have a near and dear friend of mine, Coach Wes Lee. He has a wonderful event called Transparency. It is what it is. So make sure that you type in transparency. It is what it is. It's an event happening here in the Atlanta metro area in April, mid-April. I believe it's Easter weekend. So if you're in Atlanta for Easter weekend, make sure that you check out my dear friend, Coach Wes Lee's event, Transparency. It is what it is. Now, for birthdays, I have one birthday I'm going to share. And I've got to say, it is probably the most special birthday of all birthdays because it's my father's birthday yesterday. This is my dad, Marty Sloan, and we are going to play the wonderful, professionally produced custom birthday song from Justin Peters.
I wish you the happiest of birthdays, and I hope that all your dreams come true. I wish you the grandest of all days, and I pray that the sun will shine on you. May you smile every second and remember always, I wish you the happiest of birthdays. The happiest of birthdays.
That's right, Dad. I hope you had the happiest of birthdays yesterday. I'm sorry I couldn't be with you, but we did get a chance to get him on the phone. He had a really, really good day. So I'm super excited about that. All right. I have 2 news stories that I've pulled up, and I'm going to say these, I like to use the word virgin because it really gives a full perspective of where I'm coming from with these 2 news stories because I haven't reviewed them yet. And I want to make sure that I have, okay. All right. So the first one, this actually does touch back a little bit to the market. And this is something that's happening in Britain. And I brought up the wrong screen. So let me grab the correct screen here. So Britain's Royal Mint is salvaging gold from e-waste. That is really interesting. And the reason why this piques my interest so very much, and we're actually going to go to Good News Network, which I am going to promote. They don't even know that I'm promoting, but I'm going to promote. I really enjoy the Good News Network because it is a culmination of many different stories that are all good news related. And we need more of that in our life, don't we? So Britain's Royal Mint is salvaging gold from e-waste, recycling precious metals for green investors. Okay. Okay, first thing my brain's going to go to is, wow, this is indicative of the market, because when the market gets really rocky, what's the first thing we want to do? First thing is going to be investing in precious metals and gems. So the news story goes a little bit like this. Perhaps the least, hold on, let me get the picture in here. Perhaps the latest debated of all environmental dangers, unrecycled electronic waste is piling up around the world at alarming rates. Inside every laptop and smartphone is an electronic circuit board, and gold is used as an insulator and a conductor of sensitive components. Now the British Royal Mint has placed gold at the center of its sustainability strategy going forward. The Mint is using a patented new chemistry created by Canadian-based Exire to recover and reuse the gold and other metals within these old circuit boards. And they're quoted here saying, "We estimate that 99% of the UK's circuit boards are currently shipped overseas to be processed at high temperatures in smelters," says Sean Millard, Chief Growth Officer at the Royal Mint. This approach is revolutionary and offers huge potential to reuse our planet's precious resources, reduce the environmental footprint of electronic waste, and create new jobs. I found that to be very interesting. So that is your good news story of today. Thank you, Good News Network. And I highly recommend that you check out the Good News Network, because there's always something very interesting listed on there. And everybody, this has been the news. Thank you for joining us. Always remember, if you would like to get in touch with me, perhaps that you have a friend, a family member, a coworker that may be a good fit for the show, go ahead and email us at ecooperstudios@gmail.com. Also include birthdays, anniversaries, anything you would like to announce that is happy and pleasant and kind. I am happy to do so and make it a spotlight of the show right after the financial report during the news on Saturday afternoons. Everybody have a wonderful day, but stay tuned. I have another show for you today coming right at your faces in just a minute. I'll see you in just a little bit.